Jenna and Ethan, it's great to have you here together in London today. Welcome. Both Talos and LMAX are embedded in the digital asset ecosystem, a market which appears to be evolving at lightning speed. Traditional financial institutions are increasingly waking up to the opportunities in this market. Now, before we get into our discussion of some of the themes, perhaps you can briefly introduce yourselves and your businesses. Ethan.
Oh, I get to go first.
Yeah.
Yeah, I'm Ethan. I'm the CTO and co-founder at Talos. We started Talos in 2018. Before that, I worked at Broadway Technology, where we built front office trading systems for top-tier banks, mostly focused on FX, fixed income, and derivatives. Of course, we worked with LMAX there too. We set off, our thesis about crypto is that crypto is a real asset class. It's here to stay. The biggest institutions in the world are going to want to have systems that are very familiar, that match what they have in other asset classes. And that's where we set out to build Talos. We started off by building, Talos is a institutional crypto trading platform that powers that full trade lifecycle. We started with building the trading side of it, so connecting out to trading, to exchanges. Over the years, we built out a variety of different product areas. We have our core trading platform. We have a brokerage in a box solution. We have a PMS solution. We have recently acquired Coinmetrics. So we're the leader in crypto data, both market data and blockchain data. And so we have everything you need as an institution. If you're trading crypto, we have a solution for you. And then really long term, we're focused on, we think that all assets are going to be digital assets. And so everything that we're doing in crypto today, whether it's 24/7 trading, real-time settlement, those things are going to converge into TradFi assets. And we think that digital assets are really going to change how finance works. And Talos is going to be a big part of that.
Hi everyone, I'm Jenna. I'm the Managing Director of Digital Assets at LMAX Group. I've been at LMAX for quite a while, since 2009. We really are a cross-asset marketplace, and that's been our proposition for the last sort of 5 years. Our core business is really matching buyers and sellers across trading venues. We have data centers around the globe alongside clients distributed globally, and I have been focused on digital assets since 2018 when we launched an extension of our FX offering. LMAX Digital, the spot trading arm, has been my focus, but more recently I'm looking at a new offering of perpetual swaps in the crypto space.
Both businesses early off the mark when digital assets were really in their infancy. Ethan, maybe you could talk us through how you work together with LMAX Group in a bit more detail.
Yeah, Talos connects to the entire crypto ecosystem. So we connect to we connect to centralized exchanges, we connect to like TradFi exchanges like CME, we connect to DeFi, we also do integrations to custodians to allow you to settle your crypto trades. And we actually connect to FX providers to provide FX liquidity to our clients. So LMAX fits into a couple of these categories really well. We've worked with LMAX for a long time. I think I had my first call with Jenna in 2020, I think it was. So it was one of the first providers that we connected to. And then our clients use that in a couple of ways. So we have our brokerage clients that want to offer FX crypto crosses to their clients. So Talos provides cross technology, so FX crossing technology, so they can use FX streams and cross those with crypto liquidity. So if you wanted to trade Bitcoin versus Euro, you can do that as a Bitcoin dollar trade and a Euro dollar trade. And so that fits really well into what LMAX provides.
Yeah, I mean, so FX is where it all started, really. We had some of our FX clients back in 2017 ask us, they were trading on venues back then in the crypto space that were very retail driven, and platforms just went down. Technology wasn't a thing. Institutional grade infrastructure didn't exist. So we were in quite a unique position. FX very much looks like crypto in how it trades. Trading infrastructure is very similar. So it was really about, could we as the institutional infrastructure play do the same? And actually it was quite easy for us to launch a spot crypto trading venue. We just had to replicate what we were doing in FX. So we span up another exchange using exactly the same software that we'd always used, just essentially new hardware. So I think we have a proven track record in FX. it led nicely to how we could move into the digital asset space, and the client base was actually there already. So when you think about high frequency trading firms who were really the first to come to market in the crypto space on the institutional side, they needed infrastructure where they knew that they were fully hedged. It's not the remit of a HFT is not to not know their position. So it was scary for them, and for us, I think it was a natural ability for us to offer them what they're used to in other asset classes.
So what's the best thing about working together?
I mean, for me, it's Talos provides a plug and play solution. So we spend a lot of our time looking at all the different client segments. And when you think a big part of our business, LMAX Global, is a brokerage, and we service 200 retail brokers across the globe, and they don't really want to have to think too much. They're quite simple, and what they want lots of candy in the candy store for their end retail users. So for us, we just need to keep shipping products for them, but that doesn't necessarily mean that they want to connect to custodians, connect to exchanges, to understand crypto. If we go back a bit, it's way more complicated than what they're used to in the FX world or in the equities world. So I think for us, the Talos plug and play solution, and you service clients who are at their very first sort of initial stages of crypto. You give them everything to go, but then also the really advanced clients who know exactly what they're doing and what they need. So it's this solution, the partnership, we can go to any type of client, and for me, that works perfectly.
Yeah, and I think a big part of it is we connect to a lot of different types of exchanges across the ecosystem. Some are really retail focused, and some are actually institutional, like LMAX. And so it's always refreshing for us to connect to a venue that kind of has the same DNA coming from traditional markets, where you don't have to worry about the venue going down or it's going to work correctly under volatility. And so there's certain sets of clients that are just used to that level of experience, and then LMAX is the clear choice for them for liquidity.
Yeah, I think we both have the same ethos of institutional grade infrastructure at the heart of what we both do. So it's a great partnership for that reason.
Exactly.
Okay, let's talk about the market infrastructure. Now crypto has a market cap of some $4 trillion. Daily trading volumes, $300 billion. Seems crypto's really entering the mainstream, and plenty of headlines about it every single day. Ethan, from your perspective, how has the market infrastructure evolved for crypto spot trading venues and the technology set up across venues?
On the technology side, basically the exchanges have gotten a lot better. Crypto came from retail, so a lot of the first crypto exchanges had a complicated setup. They needed to support millions of users. They needed to support low latency and reliability, and that's a really tall order. That's complicated to build. And we've seen them get better. There used to be flash crashes. There used to be the exchanges would go down whenever there's volatility. I think a lot of crypto exchanges have started using Aaron, which came out of LMAX, which is pretty cool. And similar to Talos, we use Aaron as our main transport, and we built our platform to support these sophisticated use cases. On the second thing, on the market structure, what we've seen is the crypto exchanges also, originally you had to pre-fund everything. So if you wanted to buy Bitcoin, you had to take your dollars, send them to the exchange, wait for that bank transfer to clear, and then you could actually transact. That doesn't work for institutions, right? They are used to being able to trade on credit and then post-trade settling. And so we've seen a lot of innovation there too, whether it's off-exchange custody or the exchanges or prime brokerages emerging or exchanges actually doing lending that allowing you to post-trade settle. So we've seen the market actually move from a place where it's built for retail to it's built for institutions.
The change that we've seen actually, taking it back to 2018 when we launched, our clients were used to trading FX over fixed APIs, and when we entered this crypto space, we got asked for something that actually we'd never heard of from a technological standpoint. We had to build REST APIs, so we almost had to technologically take ourselves back to service this crypto native world and these retail clients. Whereas the difference now in the way things have panned out is now clients are asking us for fixed specs. So with our launch of Perps that we've just gone to market with last month, it's like quite refreshing for once. We actually went with a REST API first, and the clients are saying we need your fixed spec. So I think that's a testament to how the market has evolved over the last 7 years, because now we're like, okay, guys are thinking differently. We're dealing with more sophisticated clients, ultra low latency, whereas it used to be an FX conversation. We're now with the more sophisticated digital asset clients talking about, speed, and that is a sign to say, okay, this market is moving on. We're moving. I mean, look, it's still dominated by retail traders, but I think the percentages of what we imagine was retail, definitely sort of 95% when we launched. Now I think we're moving slowly away from that, and we're seeing real money. We're seeing hedge funds, and we absolutely weren't having conversations with hedge funds in 2018. We're seeing real money, buy side. It's different, and naturally, with changes to the regulatory environment, we're seeing banks starting to enter the space, and that really is progression for us. And look, that market cap, it's still very small. FX can trade twice that in a day. And we're talking about the whole market cap being $4 trillion. It's still very small, but if you start to think about real money and banks entering, we're very quickly going to be talking about significant amounts of capital entering the ecosystem.
Yeah, and I think that goes back to the point is that banks and the whole ecosystem just is going to treat crypto just like any other asset class.
Yeah.
It's not special. They want the same kind of access to liquidity. They want to use the same APIs. To be able to interact with crypto like they trade anything else.
And I think what we've done together from the beginning is don't treat it differently. Like if we have a client that trades FX, why not just also point them to a crypto pair? Like it makes sense to give them everything under the one hood.
Yeah.
And I think that's been part of the success, really, the whole plug and play solution.
Yeah, and I think some of the regulatory changes that we're seeing in the U.S., like this is the trend that we're seeing, is that every broker, whether you're an institutional broker, you're a retail broker, you're a bank, you support all the other asset classes trading with your clients. Now you're just going to add crypto.
Yeah.
And the customers are demanding that, and so everyone is moving in that direction, and they want the same access, and they want the same kind of institutional liquidity they expect from.
Yeah, I mean, there's real FOMO right now, right?
Yes, exactly.
They don't want to miss out on the opportunity, and there is a huge trading opportunity now. There are big margins to be had.
Yes, the opportunities there. The fees have not come down on crypto, so I think if you look at growth, right? I think FX is doing great, but it's just not growing at the same trajectory that you see in crypto today.
And the volatility is not like what we can see in crypto. So again, another opportunity.
Ethan, in terms of derivative products, where is your client interest really focused on derivative products?
Yeah, at Talos we support both spot trading and derivatives, and that includes kind of all the different crypto derivative variants, whether you're trading dated futures, both on TradFi exchanges and kind of crypto native exchanges, perps, options. We support kind of everything under the sun. The big place where we see clients trading is in the perps. All right, this is, I think, derivatives are more than 50% of the Talos volumes. I think perps is 95% of that, maybe more. Really, all the emphasis is on perps. Traders love perps, right? It's very simple to understand. All right, it just tracks the underlying price. You have funding rates. You have good access to margin, so good access to leverage. So they're just a great product, and that's where people are focused on trading. We have a couple of interesting use cases there on both the buy side. So on the buy side, traders are using perps because basically for speculation, right? They want to have good access to leverage. There's some really interesting use cases for some of our sell side brokerage clients also. For example, if you're a sell side brokerage, you want to do post trade settlement with your clients. They want to sell a token that you don't own. Right? How do you solve that problem? Right? You could go and borrow the token, and then settle, or you could go in the perps market where you get leverage. You can short the contract, and then you can use Talos has a spread technology, so you can spread back from that perp back into spot. And so there's some pretty sophisticated use cases that are solved by perps.
Jenna, you mentioned LMAX launching perpetual futures. Tell us a little bit more about that, why you've chosen this particular setup.
Yeah, I guess we launched LMAX Digital in 2018 really because the demand was for spot. We quickly established that the most traded product is actually a perp. But we spent quite a lot of time building our spot venue. But the reality is, like, a lot of our clients are trading the spot perp arb. So it really was a natural expansion for us to add a perp to our product suite. So we committed to building that. We took a slightly different approach this time. So we built our perps offering in the cloud. We've always built everything in a physical data center. But utilizing new technology, seeing what we could learn from that, giving us a speed to market edge and a bit of flexibility. We went down that route. Just launched last month. And yeah, we're just slowly onboarding clients and going through the process of getting it up and running. But we're very excited. It trades a lot in the market today. It's the most dominant way to trade a digital asset. It takes away the edge of if you don't want to hold the asset, if you just purely want to speculate. And we have, a lot of that end client, the retail broker, that's a great product for them. So yeah, we're very excited. Putting a lot of time and effort, and I'm definitely spending a lot of my time focused on building out that product for us.
Yeah, it's great to have. I think that what we've seen in the past is that you can either trade like the CME future, right? If you're a regulated entity, and there you get it's a good product, but the leverage rates are lower. It's more expensive from a credit capital efficiency perspective. So, and then we see on the perp side, you can do that offshore kind of.
Yeah.
But I think that there is a great middle ground here that you guys are starting to occupy, where it's for institutions, but you still get all the advantages of being able to trade perps.
Yeah, and we like the idea of cross-margining within our ecosystem so that clients can hold some form of collateral. Doesn't have to be dollar-based just because it's a dollar-based product. Using your collateral to your advantage to trade any asset at LMAX, spot or perp crypto. But if you also want to trade FX, commodities and equity indices, that's an option too.
Yeah.
Ethan, any advice to LMAX for their perps product? What would you highlight?
I can be the product manager here for a second. This is fun. I think, yeah, again, traders love these contracts, and what they love about them, I think the fees are important for perps trading, right? What we see is the fees are a lot lower. So being competitive there is always, I know you don't want to hear this, but but having great fee structure is important. I think that having, as you say, flexible collateral, like what people are coming to perps for is that they get good leverage on their perps trading. And then all the things that having the same level of institutional support that LMAX always offers. And so that's the real institutional APIs, the level of service, the reliability. It's cool when you look at one of the things we do at Talos is track latency and round trip times to all the exchanges that we trade with. And you see on some of the crypto exchanges, even your median latencies are all over the place. And then you go and you start trading on LMAX, and it's just a smooth line.
Good to hear.
Which is a testament to like the technology that you guys have.
It's quite a novelty for us that it will be the first time that we've ever allowed market makers to earn a rebate. But that's the way the market works for perps. So we're going with the flow, and hopefully it attracts a different client type as well. Clients that there are a lot of market makers out there that just go to get paid. So yeah. I think we'll have some new entrants to the space as well.
Does this make you guys officially crypto native?
I don't know what David would say about being crypto native, but
Jenna, let's talk about low latency architecture, and it is incredible to think about these things. The way in which we're getting orders in nanoseconds now, billionths of a second, updating the prices, 20 times in a millisecond, 20,000 times a second. That is really hard to wrap your head around that. And I guess it's not just the reaction times, it's the synchronization as well. Very different markets with different infrastructure and responding to the same kind of political signals in lockstep. So Jenna, the question, has the new dawn of low latency arbitrage already hit crypto, do you think?
Good question. I think, well, look, that's always been our bread and butter. That's how we started LMAX Digital. We have a lot of high frequency trading firms on the LMAX group of exchanges. So naturally, they need ultra low latency. So for us, we always approach the crypto piece with that in mind. What I would say is Bitcoin's changed a lot. Like Bitcoin is a deep, liquid market now, and it never used to be. At the beginning, it was incredibly slow and not much was happening. But now, like, it is very important for clients now to have ultra low latency infrastructure. They need price discovery, which is LMAX is very good at price discovery across all asset classes, so that's important. They're looking for price improvement, better order execution, and if you don't have ultra low latency, you won't get any of that. So, we allow clients to connect over various different APIs. We allow them to use itch, a protocol that is all about fast data transmission. So yeah, I mean, it's not every crypto is about ultra low latency, but I think when you're talking about Bitcoin and Ethereum these days, it's essential.
Yeah. Well, it's interesting that you see, like, particularly during the weekend and over the weekend coming into the week, like Bitcoin, like, is the price discovery. That's where the market is. The price of Bitcoin is a leading indicator to what equities are going to do that week. It's really a price driving asset class now.
And Ethan, at Talos, how are you working towards low latency architecture? And is this linking to current client demand? Are we seeing more sophisticated clients coming into the crypto trading ecosystem?
Yeah, I think we've always seen some really sophisticated players in the crypto ecosystem, actually. Like the HFTs have always been there for years, right? And they've been honestly making a lot of money.
Yeah.
One of the things we're trying to do at Talos is, and I think that you guys are also doing at LMAX, is trying to level the playing field a little bit and provide the same level of high frequency trading tools that people frankly have in other asset classes into crypto to level the playing field. So our clients have been demanding lower latency solutions. We have a product that we call Fastlane, which is really going from what we think of as access to the crypto markets before, which might be going over REST or over the internet, moving it to be more institutional. So that's connecting to exchanges in the best way possible, using the lowest latency APIs, skipping. Sometimes when you trade with some of these crypto exchanges, you actually go through a CDN, which is like a Cloudflare. And so you're actually hopping through another system, and so we get rid of that. We make sure we're connecting in the best way. We also are working with a partner to do cross-regional private links. So instead of going over the internet or going over a cloud backbone, actually using private lines. And finally, we've just a testament to how the ecosystem has evolved. We've rewritten all of our market data stack all in C++. Which is pretty cool to get the lowest latency. So really, again, bringing those same kinds of tools that you expect from other asset classes into crypto and really trying to level the playing field.
Yeah, and private lines, they didn't really exist back in 2018 when we first started. The concept of cross-connecting the client's matching engine with yours is completely normal in FX. And essentially, the client wants to be as close to you as possible.
Yeah.
We weren't having those conversations back then. Whereas now, first thing on tip of the tongue of a client is, have you got private line? Where are you in AWS? Can we cross connect in LD6?
Yes.
It's again a testament to this move towards a change of client, a sophisticated client.
Yeah, all the clients are becoming definitely more sophisticated. Just the bar is being raised to what you can do in crypto. But crypto has always been a very complicated global ecosystem, right? And that way, it's a lot like FX, right? FX doesn't just trade in London, right? It has kind of these hubs, but it really trades globally.
Yeah.
And we see that even more in crypto. I think Bitcoin is like the ultimate global currency.
Yeah.
And so you trade this, it trades in New York, it trades in London, it has hubs in Tokyo, but there is no like global center. And so it's very important to have these low latency connections across different regions.
Yeah, and on that, we very much we talk about our top 10 traded currencies, and we look at euro, dollar, dollar yen, Bitcoin, Ethereum. It's all one. We don't treat them separately now. So we've actually spent quite a lot of time consolidating and diversifying our cross-asset marketplace, because actually we think about our segmentation and we say, okay, we're going to talk to corporates or buy-side clients or brokers, and we go to each of them and go, okay, we do all of this stuff, and we do it in all of these asset classes. It's the convergence of the two is almost they're coming together as one, I'd say now.
Yeah, and particularly as you're getting into perps and doing, as you say, cross-margining. Imagine being able to, I'm sure you're doing this, being able to cross-margin your FX with your crypto, with your
Exactly,
perp spot, all in one place.
And
is
what
a
you
powerful
mentioned
product.
earlier about like a Bitcoin lira currency, it's just not that liquid. So it would make a hell of a lot more sense to trade dollar lira and Bitcoin dollar, and just that triangular. I think is that you have putting everything together with LMAX liquidity is fabulous for us, because you're just making it a lot simpler for the client than having to go and do it themselves. So again, we very much appreciate that partnership and what you're doing there.
Yeah, and that's such a powerful product for retail brokers globally.
Exactly, yeah.
Everyone needs to add crypto to their set of products that they offer, and Talos has a lot of solutions partnered with LMAX.
Fantastic. Let's talk about new participants in this market. Ethan, Talos recently published a report setting out a bank's pathway into digital assets. How do you provide assurance or reassurance to those traditional banks, traditional funds, as they're thinking about getting more involved in digital assets?
Yeah, when banks come to us, I think sometimes they look at crypto and they say, this is scary, this is risky, is it worth it to get into this asset class, right? And to some extent, I think that they're right? In crypto, there's always a chance of permanent loss, right? We just don't see that in other asset classes. If you send Bitcoin to the wrong address, right, or you make a mistake, you're not going to get the funds back. It's just how the ecosystem, how the asset class works. But these are also solved problems. We've been doing this. So working with Talos, I think what people come to us for is a kind of tested and trusted approach to the market. We'll help you choose the right partners to work with. We'll help you set up the right procedures around how you do settlement, how you interface with a custodian. People also come to Talos for the level of service that we provide. So from the beginning, we said one of the differentiators for us is the level of white glove service that institutions expect and require. And so if you work with Talos, and we're able to kind of tame the ecosystem to make it very palatable to institutions.
And it's so important if you think about exchanges or custodians that have 10 million or 100 million end users, that white glove experience is just not possible. So I think institutions really appreciate that level of treatment.
And Jenna, what are the most important risks you think banks need to manage as they plan to enter crypto assets? I
think banks, trading-wise, trading infrastructure, it's very similar. It's not that bit that's been the problem today. It's been the capital treatment of digital assets, the unknown, what they can and can't do, and then the regulatory piece. The real lack of frameworks has been a problem. So, and I would say that's been what we've been talking about for the last 7 years that we've been doing this. But actually, we're now in a period of, okay, things are changing. A couple of acts this year that have come out or are coming out, hopefully towards the end of the year. We're getting clarification around stablecoins. We're getting an understanding in the US, for example, of who will regulate this product, whether that's the SEC or the CFTC, and just giving the banks the leeway to start entering the system, rather than, banks, we have over 40 banks trading FX with us. I would say over the last 7 years, about 10 of them have taken crypto market data, but more in an exploratory fashion. In the last 6 months, with fast forwarding that, we really are we're now sort of more like 60% of those banks taking crypto market data. So it's just about being given the green light now to move forward and working out where they're going to sit. So Ethan mentioned earlier about the prime and the credit piece being a big part of what we're doing in digital assets. If you think about a bank actually priming digital assets, that opens up a ton of capital, and it really does allow for the industry to accelerate a lot. So are they going to be a prime broker? Are they going to trade it? Are they going to be a custodian? I think there's a lot of options for the banks, and we're super excited to be working with them and to see what comes of that next year.
Yeah, and I'm sure you felt this when you started LMAX Digital in 2017. We felt this in 2018 when we started Talos, that we were almost too late. Like the institutions already were there, they knew what they were doing. That's certainly the feeling that we had. And if you fast forward to today, I guess 7-8 years later, it is finally happening that due to the regulatory changes, due to some of the market structure improving, that we finally can support actual large institutions, top tier institutions in this space.
Let's talk about AI. Ethan, how are you using AI at the moment, and can it mitigate some of the risks that are associated with extreme market volatility maybe?
Yeah, so we use AI a lot internally. We're big proponents. So it's accelerating the development process for us. We use it. It makes it a lot easier to write a lot more tests for our software, so increasing the safety of the product that we deliver. We use it a lot for how do we service our clients. We have an internal chat tool, which is pretty cool, that allows us to support our clients more effectively. On the actual like risk management, trading algorithms, portfolio construction, the way we approach this from those kinds of non-deterministic tools is that Talos provides the infrastructure, does all the boring parts for you, and allows you to build the complicated alpha on top of that. And so that's what we see a lot of clients do, is that they use Talos to connect to liquidity. They use Talos to automate settlement, while they get to focus all of their efforts on what their edge is, which is these more advanced risk models or very advanced trading models. And so that's how we see it all fitting together today. Might change in the future, but yeah, there's a lot of potential here.
Jenna, how do you see AI?
Well, similar to you, I mean, I would say we're at the starting point. Internally, we're using it a hell of a lot more. I mean, I've come back from maternity leave 3 weeks ago, and one of the first things that people are asking me to do here is do AI courses. So things have changed a lot in the last 12 months. Yeah. So yeah, I mean, we're rolling with it. You have to work with AI. It's not, you can't just type it in and go, okay, that's good. Like, it takes a long time to sort of consolidate all the information. So we're putting a lot of effort internally, and we'll see where it takes us. But we're definitely not letting it run the company just yet.
Yeah, I have a 1-year-old, and I think my biggest AI usage is actually just asking ChatGPT about everything, about if she's sick, it's like, hey, she has a rash, should I take her to the hospital? My wife loves it.
Yeah.
But maybe, yeah, I think there's a lot more to go here.
Final topic, let's talk about blockchain-based decentralized finance, DeFi. Ethan, how is that changing the game in terms of infrastructure?
Yeah, I think DeFi both adds a lot of opportunities and a lot of challenges. On the opportunities, it really does change the way you trade. So if you do DeFi execution, instead of, you're combining the trading and settlement all in one go. So instead of like we usually do, which is we trade, and then T+1 or T+2, we go through some settlement cycle. In DeFi, you're doing the trading and the settlement in real time. This provides a lot of opportunity to simplify the procedures. You don't have to take any counterparty risk when that happens. It also brings in a whole lot of challenges. How do you get low latency? You're actually like doing a blockchain transaction at order submission time. So how do you make sure that's low latency? How do you protect yourself from sandwich attacks? How do you deal with the fact that DeFi is permissionless, so you don't know who you're trading with? There's a lot of challenges there. Some of the things we're doing at Talos is we do support DeFi, and we support it just the same way you trade any other asset class or any other, just like routing exchange to LMAX, you can route an exchange to an order to Uniswap. And we take care of the signing of that transaction, the custodial interaction, and it looks very similar, although a lot lower latency.
Yeah, and I guess for you want to let your client choose. They make their own decision of where they want to execute. Yeah, I mean, for us, like we run centralized exchanges. However, in terms of sort of building out the digital asset product suite, it made sense for us to look at DeFi and provide solutions for clients who want to use it. So we've built an all-to-all asset platform, and it's really a combination of everything we do. So it allows clients to access, to move, to trade, and it's a combination of the on-chain execution, off-chain liquidity, but still using our premier sort of institutional grade pricing and liquidity, but bringing in that element of sort of low risk counterparty. So we think that it will be a solution for some of our partners and clients, but we're just, again, getting ourselves this bringing everything together that we do and that we've been building for in the last few years, and then going out to each and every client in every segment and say, okay, this is what we do across all asset classes in CFI and DeFi. What works for you? What solution can we provide you with?
Yeah, and I think the interesting thing about DeFi is that it's not just trading. There's a lot of other elements to it. Particularly on the yield generation, so you can do staking, right? So clients are going to want to stake their assets if they have them in custody. There's ways to make to actually provide liquidity into AMMs is an interesting one. You can do on-chain lending, and so there's really this whole suite of products around DeFi that's not just the trading on AMMs.
We've covered a lot of ground. Let's wrap things up by casting forward. What are the biggest items on the roadmap for 2026, Ethan?
With the regulatory changes that we've seen in the US, one of our big focuses in 2026 is expansion for both retail and institutional brokers. Everyone is adding crypto as another asset class that they support on their platforms and leveraging Talos to do that. But we have a couple of other big things. We're expanding our portfolio management platform to support multi-asset. Not just crypto. What we're seeing is actually exposure to crypto these days means a lot more than exposure to spot and derivatives. It means actually going and getting exposure to ETF, so equity exposure. It means with the rise of the DATs, so the digital asset treasuries, it means actually exposure to equities, derivatives on those equities. So really going cross-asset for our portfolio management software. We did the Coinmetrics acquisition, and so we're embedding data from Coinmetrics into the platform. We're also we have a bunch of private data that we have at Talos and distributing that to Coinmetrics clients. So really doing that integration. We're about to have a big announcement on this around, we have a marketplace product. And so in the past, we've been an EMS platform, right, on the buy side, and a brokerage platform on the sell side. We're connecting those two together. And so we have a marketplace product that allows our clients to do RFQ negotiations and agree on a trade and settle bilaterally. So we're really expanding that out to support spot, OTC derivatives, loans, options, and so entering that over-the-counter trading business. And then finally, we're constantly making our platform better, right? We've talked a lot today about how the institutions are demanding lower latency institutional platforms. I think we're the premier provider in the space right now, but you can't be comfortable with that. You need to be constantly improving.
Jenna, what's on your roadmap?
So for us, we're just coming to the end of our completion of our cross-asset marketplace. We've spent a good 5 years building it. So early next year, we'll be looking at the transition from investment to execution. And that really means looking at every single client segment on our books, going to market and talking about our capabilities across assets. We are looking at some new geographies that we've sort of not had the opportunity to target. Likewise, with the regulatory changes, we'll also be sort of popping up where the frameworks are appearing, because we want to be in top tier jurisdictions to support our portfolio of assets. And then strategic partnerships are key. We've got a couple of announcements coming out in the near future, really trying to work with firms in the industry to solidify what we're doing as a trusted partner. And then finally, I guess we've got a couple of new products, but perps and growing that organically, but also amongst all our clients, will be a big focus for us in 2026.
Well, this has been a super energized and insightful conversation. Jenna, Ethan, thank you both very much.
Ethan, thank you very much for coming to the LMAX offices to have a chat with me today. It's been great.
This was really fun. Thanks for having me, Jenna.